Fear, uncertainty, and doubt. Canadian real estate investors are mired in the challenges that we face investing in real estate. We know that there are no bad times to invest in real estate. There's just the wrong strategy given the economic conditions. I'm joined today by Rob Mills, Senior Associate with Equiton, and we're talking about the REIT that he manages and helps manage with Equiton, the Real Estate Investment Trust, an opportunity for you to put your capital to work in the real estate market. Rob Mills, thanks for joining me.
Yeah, not a problem, Patrick. Glad to be here and looking forward to having a bit of discussion about the current market environment in the real estate space within Canada.
So let's open up with a couple of things that I've done research on over the years and have really come to the conclusion right now in this market. When we consider what's happening economically at a global macro level, I don't think I can stress enough that real estate is still a hard asset, a store of value that we need to get our capital placed in. Now, how do we do that? I joke, but the do-it-yourself real estate investor has lost the building. They are no longer stepping up because it is problematic, it is challenging. Financing, cash flow, finding deals that make sense has become hard work. Having said that, if we follow the money, and I don't even know if you know this, Rob, but my research shows that the top 10% income earners are investing in private REITs such as Equiton. That ability to put our capital to work, watch it grow in the real estate market, but truly an armchair investment style where you don't have to manage it, you don't have to work at it. You put your capital to work into a very strong real estate investment trust, a private REIT. Tell us about Equiton, Rob.
Yeah, most definitely. And yeah, I appreciate you sharing that. I have heard that. I've learned that over the last couple of years. And, to take that even a step further, even pension funds and insurance companies are diving more and more into the private REIT space due to the consistencies and streamlined returns over time that something like a private REIT can offer because of the stability, how it's really focused on the value of the assets that you're investing into, not the emotional volatility of a market. But yeah, a little bit about Equiton. Here at Equiton, we're real estate professionals managing real estate assets on a large scale. Now, we didn't want to just focus in one space or another. We wanted to give the opportunity for all Canadian citizens to invest into multiple different real estate strategies, really depending on your life circumstances, time horizons that you have, risk tolerances. So this would be a mix of multifamily residential space. So this is more apartment buildings,
Mhm.
commercial assets, large scale lending, and then land development opportunity as well. So we can help with the supply and demand imbalance that Canada is really experiencing today's day and age.
Now, Equiton's been on the map for a while. You've got in excess of $1 billion of assets under management. Give us a little bit of background in terms of what Equiton has done over the years that they've been building, and where are you at relative to the goals that Equiton had?
Yeah, you know what? We've been in business for 10 years now, and we're proud to hit that decade mark. And we've really expanded very fast. We weren't expecting to hit our first billion for at least the 10-year mark. Well, we're at 1.5 billion in assets under management and another 1.5 billion in developments currently underway. So we're really exceeding and scaling faster than we even ever expected. And part of the reason for that is, leading up until 2015, there was only a level of accredited investors or institutional investors that could have these options available to them. Now, the city found, we really want to allow all Canadian citizens to further diversify their portfolios. And part of that is in the private Canadian REIT space. So since then, we've grown to almost 16,000 investors. And we are proud to say as well, in all of our investment strategies, we've actually never had a negative month of returns and never lost a dollar of investors' capital. And that really just speaks to the professionalism that we're offering here, the proper property management. But not only are we property managers, we're the developers, we're general contractors as well. So you
Mhm.
get that one-stop shop experience where you're working with really trusted people in the real estate space.
It's interesting that, investors understand, I think most investors understand that there's great opportunities in real estate. But as
Right.
we look at what's happening today, there's a lot of negative emotion and probably arguably appropriate given the uncertainty that is happening and unfolding economically, US, Canada, current tariff issues, a government that's uncertain in Canada, a new government into the US. There's a lot of things unfolding, and not the least of which is the do it yourself investor is challenged to find property that cash flows. The point of entry is very high. You need a lot of down payment. Then you have to jump through all the financing hoops. It's becoming very heavy, yet there is definitely a need to put our money to work given how much our fiat currency, our Canadian dollar, and dollars globally, in other words, fiat currency once again, is losing value. We need to
Right.
get our capital to work. And in a private REIT structure, such as the opportunities that Equiton provides, we can invest. We don't have to go through the mortgage hoops. We don't have to manage that particular property. The portfolio is quite diversified. Uh, if I'm saying, okay, well, I want to invest in Equiton, how much money do I need to get started, or how much, do I test the water? How do you respond to that question from your investors?
Yeah, and great question. You know what? You commented before about getting into active real estate. There's a lot of upfront capital, time horizon. You have to secure financing, vet tenants. We're offering a strategy where Canadian citizens can invest with as little as 25,000 starting investment point. So it becomes a lot more manageable where maybe you're that younger individual that can't afford to get into that active space. Maybe you're somebody that's a professional, you're working a little bit too long of hours, you don't have time for it. Because really, when you're dealing with rental properties, I have no problem with rental properties, but they are a part-time job on a good day, full-time job on a bad day. I've had that personal experience in my own personal life, and I've shifted more towards that passive approach because you can start at a good price point, you can get in, get invested, become an indirect owner in a large portfolio of assets, so you're further diversified. But not only
Mm.
can you get into one asset class or another, you can get into upwards of 5 different Canadian real estate asset classes with Equiton. And that's really the standpoint that we want to come to is, what's going to happen with the market? What is Trump going to say tomorrow that's either going to skyrocket or plummet the market? We want to hedge against that and be that diversified proportion of individuals' portfolios where, you don't really have to worry about what's happening with this side of things. It's backed by the physical asset. The returns are focused on the value of that asset. So it's a lot more secure and streamlined.
You know what I love about, a model like a REIT like Equiton, and as an
Mhm.
investor in Equiton myself, we start to understand one thing. Right now, and often in economies, it's driven by emotion. And the emotion
Right,
is about what's happening today. We
right,
all, as investors, we have to say, okay, let's take the emotion off the table and look into the future. Real estate is a get rich game to be played, but it's not a get rich quick. It is
right.
place your capital and let it do what it needs to do in the real estate world, and that is future state. So if we look at real estate in Canada right now, absolutely uncertain. Is it opportunity for many investors like Equiton? 100%. But let's look at 5 years down the road. Look at 7 years down the road. Let's look at 10 years down the road, and we ask ourselves, where do we see real estate going in the future? Equiton being capitalized to the degree they are with the expertise that they have, being in the game that they are playing today, get to take advantage of the uncertainty, solve problems, get real good investment or real great investment opportunities because of the uncertainty, because of the pressure on the real estate market. Do you want to kind of fill in some gaps in that particular conversation, Rob?
Yeah, I mean, I like the way that you worded that is, you look at the real estate market as a whole, and it's meant to be a long-term investment strategy, whether you're going the active side, whether you're going passive side with something like Equiton's offerings. And you don't want to necessarily just look at today. This is a snapshot in time, and you might see headlines or see something in Toronto or in BC, but that's a single snapshot in time. And I feel like these headlines try and use that negative connotation to try and trap people in and really grasp more viewers. But really, if you're looking at the savvy real estate based investors, you're not looking at today. You're looking, what is the future and how can I make my gains off of something like this? And that's what really Equiton is trying to do. I mean, we just went through a high interest rate environment, so we were working towards purchasing more multifamily residential assets, trying to grab them up at good price points. Working towards doing a lot of renovations to our existing assets to keep increasing value. But then if you look at the other side of things, something like mid-rise condo development, we're not focusing on high rise. We're getting to the skirts of Toronto. We're looking at these opportunities and good opportunities in established communities. And we're changing really the design of these buildings. For the last couple of years, developers have shot out condos, and really a lot of them was to produce as many as possible. And they were meant for investors to rent them out. And I'm not going to say necessarily they were tiny condos, small
Mhm.
condos, not necessarily meant for an end user. So Equiton's perspective on this is we're looking at it and we're coming and starting maximum condos by Equiton. And what that means is maximum size and maximum quality. So we're working with today what we're seeing in the market and what the future is going to be through increasing these qualities, Scavallini kitchens, Bosch kitchens, we're adding these into the contracts. But not only are we doing that, we're increasing the size of our units by about 10% on a square footage basis and starting to create it more for the end user. There's going to be a lot more purchasers going into these condos, not necessarily to rent them out, but to actually live there, maybe purchase for the next generation. And we have a lot of condo completions, and that's why there's a huge amount on the market, but a lot of them are small. So if you can remove a lot of bachelor pads, turn one bedroom plus dens into two bedrooms, maybe create two bathrooms in a one bedroom, this is going to adhere to the future market. And really, investors need to start considering this today and looking at some of the development strategies that Equiton is working on.
Well, and I think that you said something really key there. Number one is you using the term strategy. You are future thinking. You are
Right.
considering the exit strategy. You're considering the future demographic. You're looking at it from a holistic but future state, which I think is absolutely essential in order to have success in the real estate market. Now, when you consider, here's my experience with Equiton, by the way, is that it's not like, okay, we scratch a check for 25 grand or 100 grand or whatever the number might be that you say, something I want to invest into this. And it isn't a single product. It's not like, okay, there's just this REIT and there's just this much money and this is what it is. I mean, you're very diverse in what you're doing. And my own experience was lots of questions. I was asked to make sure I'm doing my diligence. What do I want the outcome to be? What are my goals? And Equiton is stepping up to say, okay, based on your goals, based on your diligence, do you want to move forward? You do all of the things that need to be done. But really, it is, from my experience, and I'm sure others, is that you really are based on customer focused experience where you're doing quite a lot of hand holding so that even the most, I guess, new investor, rookie investor, or even the most sophisticated investor have opportunities to have great conversations, to do diligence, to understand how to do that diligence. And you're there to support them in asking those tough questions and making
Correct.
sure that they're really clear on what it is that they're investing in. Uh, do you want to add to that? Because I know that the customer experience is really important to Equiton so that people feel confident in what they're doing.
Yeah, you know what? I think that you've got most of it there, but really we want to create that good experience for every single customer. And whether you're, I like to call it a green investor, somebody learning in the space, you never tried this out or any sort of investing in general, or if you're very sophisticated and you know what you're talking about, we treat every single person the same. We walk you through a non-obligational educational meeting, and we really learn a lot about the investor. What is your goals? What is your time horizon? What is your risk tolerance? And what I really like about, Equiton, and I've spent 3 years here and I manage a large book of clients, is we're very transparent about everything that we're doing. We give updates, not only on a quarterly, monthly basis, quarterly, annual, and we have those conversations consistently with our clients so they know, where we're moving, the trajectory, and what's happening in the environment in Canada. We want to explain that to our investors so they know what they're investing into and they know the growth of it over time so that if we are shifting the style of condos that we're building, or if we're, purchasing a different type of multifamily or commercial. Our investors are always well informed.
So does Equiton go outside of Ontario? I know that you're very focused on that kind of general area, but is Equiton also building a portfolio outside of Ontario? I'm just curious. I don't know the answer to that question, Rob.
Yeah, no, great question. So, for the first, like, let's say 8 years in business, we wanted to focus in Ontario because it's technically, let's call it our backyard.
Hmm.
This is a place where we know and understand the market. There's a lot of growth. It's a hub of Canada. So there's always going to be a large population and also immigration coming in. Now, over the last couple years, we've expanded into that billion-dollar range and multi-billions now. We do want to keep working our way across Canada. So at the end of 2022, we did buy two apartment buildings in Edmonton. We
Hmm.
purchased another one in December of last year. So we're scaling up the Edmonton side of things. And we do want to work our way across Canada into all provinces and communities so that, you still do get further and further diversification. Now, in order to do something like that, it does take a lot of due diligence. We're not a company that will just go out and randomly buy any given real estate asset. We have a huge amount of checklists that have to come into play there, and we have to make sure that that's an asset that makes sense for the portfolio, not only for the company, but for the investors and the consistent returns that are attached to it.
I love it. So, Rob, as we wind down, I want to point out to people that, Equiton is that opportunity to do
Mhm.
your diligence, to kind of lift the hood, have conversations with the team, such as Rob, to really look at what's going on in the real estate market, to put our capital to work. We have to look seriously at what is happening in the current economy today. I think the reason we invest in real estate has changed, and as much as it is about wealth growth and financial future creation, it is also about wealth preservation. And Equiton gives us the opportunity to put investment capital to work in Canada's
Mhm.
real estate market in an effective way, be that armchair investment going from active to passive. Some of you who are listening may have active real estate that you're saying, something, I'm tired of managing it. I'm tired of the worries and the concerns. I'm going to actually sell some real estate, pull that capital off the table, and put it over to work with somebody else who can take on all of the issues that come up investing in real estate. Rob, any final words that you want to share with the audience as we complete this
Yeah.
conversation?
To just go off what you just said there, selling or active rental property or not, Equiton does work with all different types of accounts. So, I want the RAIN members to understand it's not like it's just cash investments. We do take on all registered accounts, RRSPs. A lot of people forget about LIRAs, locked in retirement accounts.
Mm.
Even if you're in retirement, RIFs, lifts, corporations, and non registered cash. And we do target a range between 8 and 20% returns. So it is a good strategy. Even if you do own active, you can use those registered accounts to still get invested with us in something that you might know and understand and trust.
I love it. Rob, thanks for sharing your time today, your insights into Equiton. Folks, check out Equiton, check out Rob Mills, and thanks for your time again, once again, Rob.
Yeah, thank you as well. Appreciate it, Patrick.